Hey, what's up, stock compounders? Brad here. Thank you to everyone who submitted a question for the Q&A today. Let us jump right in. We've got a lot of questions. So, first one from Jay Money. What is the worst stock investment you have made, and what did you learn from it? So probably the worst stock investment I made, I bought call options, long-term call options or leaps on Fiat Chrysler. Okay, I thought I was smarter than I actually was. The Fiat Chrysler was going to be going up quite a bit, and so I decided, well, why just invest in the stock if I can invest in the option and potentially make a lot more on the upside? Well, what happened there is that we hit a global pandemic, all right? And so the stock tanked quite a bit. It's recovered since then, but it never got back to where I needed it to be to make money. I thought I was smarter than I actually was. And what I learned from it is that, yeah, it might seem smart to buy these kind of long-term call options if you're bullish on a stock. But that, looking good is on the upside, right? When you look at the downside, you can lose all your money with an option because you're really betting against time. And time, if say you think something is going to be worth $100 3 years from now, okay, a stock is going to be worth $100. Now, and say it's worth $50 today, so you think it's going to double in 3 years. It might take 2 years for the market to agree with you that it should be worth $100, and it may just sit flat at 50 for 2 years or even longer. And if it does that, you're screwed when it comes to options because you didn't have time working for you. When you buy the underlying stock, what you have is the opportunity to wait, to be patient until the market hopefully eventually agrees with you. So that's what I learned from that one. Rudra, the best part of your videos is that you always share your sources of information. What are some tools you use for research that you may not have gotten a chance to share about? There aren't that many that I use, and I'm pretty open about them in my videos. I use Corner of Berkshire and Fairfax. I use Value Investors Club. I use Ticker Terminal. And I use Magic Formula, Stock Screener. There's not a ton. I use Morningstar, Value Line. But, of course, when I look at a company in Corner of Berkshire and Fairfax, it's a message board. So, there could be a lot of links to different articles and research through there. But, I don't have a ton of tools as compared to a lot of other investors. And I'm perfectly cool with that. I think it's easy to get overwhelmed with too many sources of information. So that's what I use. Mind Potential. Have you looked for potential 100 baggers? Can you share your research? So I am always looking for 100 baggers. It's really impossible to know if something you buy is going to turn into a 100 bagger. But there are certainly signs that you can look for. And something I'm digging into now, Nick Sleep. Monish has really been talking about Nick Sleep's investment letters from like 2000 to 2013, 14 years of investment letters. So I'm digging into those. A book that Pabrai read last year that he really liked, 100 to 1 in the stock market by, I think it's Michael Phelps. And of course, 100 Baggers was written as kind of the sequel to that by Chris Meyer. So those are great resources to, look for patterns. Look for signs that companies may turn into 100 baggers. But there's nothing really on my radar right now where I'm like, oh, this has a good chance of becoming a 100 bagger. But always looking for those opportunities. Mike, hi Brad, saw a pretty compelling argument for buying call options as opposed to purchasing the shares outright. So, I alluded to this earlier. A way to leverage your investments and still have some capital for other investments. So, that's my take. The problem is the thesis can take longer to play out than the duration of your options. And when that happens, you're left with nothing, right? You lose everything you put into those option positions. So be careful with that. Keep an eye on the risk of losing money, and make sure that when you're comparing the upside to the downside, it's still a compelling case. Investing with Frank, how much do you focus on a CEO who can strategically allocate capital? Seritage and Micron aren't standout management teams that are known for capital allocation, so I'm curious how much you consider this. Let's talk briefly about allocating capital. So you've got a business, it's bringing in money, right? It's earning money. First thing it's going to do is plow those earnings back into kind of maintenance capital expenditure to keep the business kind of running, to keep the doors open. But when you have excess cash, which hopefully you do if you're running a business, there's a number of ways to deploy that capital. You could return it to shareholders via dividends. You can buy back stock, kind of retire stock, so that each shareholder gets kind of a bigger piece of the pie. You can plow it into expanding the business, opening more stores, maybe opening another factory, growing the business. Or you can look at acquiring other companies to increase value to shareholders over time. So there's a number of ways management can allocate capital. I'm kind of a beginner on this topic. I don't have a lot of insights to share here, but two resources I would point you to. Look at Warren Buffett's letters to shareholders over the years. Warren Buffett is one of the best capital allocators of all time, and an easy way to kind of see evidence of that is to look at the compound results of Berkshire. If you had bought back when Buffett first was buying Berkshire and held on to today, I mean the compounding is incredible, and you really need solid capital allocation to get there. Another resource I would recommend, so Pabrai has been talking about this company he bought in Turkey, this warehouse REIT, and how it's a father-son team who are managing the company. And Pabrai says they're really strong capital allocators. So, one thing you could do, if you could find those annual reports for that company in English, you could go back over the last 10 years and really try to follow, how are they allocating capital, to kind of reverse engineer what Pabrai is seeing in kind of the superior capital allocation of that company. But it's a great question, Frank. It's definitely a huge factor in identifying these great long-term compounders. Carol, just curious, any idea how people like Ted and Todd get in with Berkshire? I don't know the answer to that, but I can help with this next one. More important, how can an up-and-coming investor get to the right place to get mentored by the best? So this reminds me, Monish Pabrai, I think it was in 1999, he sent a letter to Warren Buffett, basically asking Buffett if Pabrai could work for him. He was the only guy that Pabrai wanted to work for. Just a minute, I got a tickle here. And, Buffett responded within, I think, 5 days. Basically said, look, I'm not the answer. I'm not your guy, but best of luck to you. So Pabrai, he was a little bit crushed by that, but he decided to just start his own fund and learn by doing. I think, Li Lu did something similar. He just kind of dove right in. I don't think he had really any mentorship where he was working for another investor. So Gary Vaynerchuk has pretty good advice on this. Basically what he says is, figure out how you can add value to someone you want to work for. This person you're desperate to work for. You really want to learn from them. Figure out what skills you could develop to add value to them. Just because they make a lot of money does not mean that you can't help them with something. And then the second piece is volunteer to work for free. Okay, not volunteer, but say you will work for free, and just to drink up what they've got over 6 months, a year, however long it takes. And very few people are actually willing to do that. And it'll set you apart. And it will, the value you're going to get from that is going to be orders of magnitude more than if, you were getting paid kind of the rate that you'd be able to fetch as kind of an entry level into a position like that. So, those are some ways to set yourself apart. Would you consider allocating 10% of your portfolio in gold, as Phil Town suggested in his last video? I have no interest in investing in gold. If you look at the historical performance of gold over the last 100, 200 years, it's not going to compound wealth. To me, gold is more of a way to diversify a portfolio in order to preserve wealth. But I'm really in wealth growth mode. So gold just really isn't interesting to me. And I don't know how to value gold, right? Gold doesn't spit off cash like a business does. I don't know how to, predict the cash flows looking out a decade and then discount them back to a fair price today. I just don't know how to do that. I don't know how to value gold or determine what a margin of safety might be for it. So just it's kind of outside of my interest. Could you talk about your environmental sustainability research or lifestyle? Any book recommendations? How are you incorporating this into your future? So as I've said in videos in the past, sustainability is a passion of mine. It's something that is a big part of my life. Within the next couple of years, I plan on purchasing land, establishing a community, having, a big food production element of the land there, perennial trees, fruit and nut trees, probably some kind of livestock, water harvesting. So there's going to be, it's something I'm very passionate about. Book recommendations. I really like the book Drawdown by Paul Hawken. Kind of goes through what are the highest impact activities that we can take on today to kind of remove carbon from the atmosphere. So those are some thoughts. It's a big part of my life. If you had an opportunity to have lunch with Monish Pabrai, what would you ask him? Oh man, I would probably sit for a couple of days just thinking, just like coming up with, all right, what do I desperately want to know from Monish Pabrai? So that would be a longer exercise. But one thing I've been thinking about recently is, Pabrai's, he talks about how he's moving to the long-term compounders now, right? He started out investing in these companies that he was hoping to buy and not look at for 10 or 20 years, right? But when he started his fund in 1999, he kind of started out with the fund looking for 50-cent dollar bills. And that's changed now. And my question to him would be, if you were starting all over again with $1 million, right? Small amount of capital, would you right out of the gate start that approach focusing on the long-term compounders? Or would you start kind of where you started, looking in corners of the market where there's kind of short-term arbitrage opportunities, where you could buy a dollar bill for 50 cents or 40 cents or 30 cents? So I'm curious how he would answer that question. Diego, how much of your portfolio is in cash right now? Right now it's about 50% cash. Are you concerned about the big market correction and how that could impact your positions? I'm not concerned. I'm actually excited. I hope there's a big market correction. Correction's kind of weird to say. I hope there's a drop. I hope the market tanks because, as someone who plans on investing in the stock market for decades into the future, I want to buy things as cheaply as possible. And when the stock market crashes, that is the best time to be able to do that. In terms of existing positions being impacted, it's really just Micron and Seritage that I own a pretty big chunk of. And those may drop as well. They probably will. If there's a crash, right, they're going to drop 50% maybe. But that's just on paper. I believe in kind of the underlying businesses underneath those shares. And I'm fully confident that they'll bounce back. So, but if I had money in SPACs right now, if I had money in kind of this electric vehicle companies, or these kind of high short interest companies that have had some tailwinds recently, I would be concerned about a market correction. I think now is the time in the market to focus a lot more on the risk of losing money than the risk of missing out, the risk of missing opportunity, which is interesting because most people have that opposite, right? And you can tell by how many people are just flooding into the markets. It seems like the only thing people are scared about these days is missing out. Whereas, and when that happens, when that situation is present, it's actually the risk of losing money that tends to be highest. So keep an eye on that, guys. Jose, at which age did you buy your first common stock? So I think it was about 5 years ago. I would have been 34 years old. So, I hope a lot of you are younger than that, because really the biggest advantage you have in this game of compounding is the length of the runway. I wish I had done it a lot earlier than that, but I have 2 kids right now. I have a 2-year-old and I have like a 4-month-old, and they already own stocks. So, hopefully what I missed out on, they're getting in spades. So I don't know, maybe it'll even out somehow. That doesn't make any sense. I'm excited to be putting them in a position that, I discovered kind of way later in the game. Where do you look for quarterly share buyback history of a stock? So where I look is Morningstar. And, I have a membership to Morningstar. It's through Fairfax County Library in Virginia. There's something called a non-resident library account. So you can sign up as a non-resident, and it's I think it's like $30. I don't know if that's per year or if it's lifetime. Doesn't matter. It's a small amount, and you get access to Morningstar and Value Line through their kind of online portal, which is a huge value. So I can get on Morningstar. I can look at kind of the balance sheet section of Morningstar, and I think I can look by quarter at number of shares outstanding. I usually just do it by year, but I think you can probably look by quarter, and that's where you can see what the change is in the number of shares outstanding over time. With Buffett saying to use the 10 or 30-year bond as an approximate discount rate when discounting future cash flows, how do you think about that in your DCF? So I don't alter the discount rate that I use in my DCF, depending on what the interest rates are in the market. That's not technically the most accurate way to do it, but I don't care about technical accuracy. I want to kind of build in a margin of safety. So sometimes I use 10%, sometimes I use 15% as my discount rate. I think there's an issue with this, using a very low interest rate and inflating, these valuations for companies. That makes me nervous, and I don't quite know how to articulate why, I'm not on board with that. But I think Jeremy Grantham gets into that a little bit in his interview on what was it? I think it was Bloomberg. I think Jeremy Grantham did it. I posted a video about it recently, so you can find the actual clip with Jeremy Grantham, and he talks about this concept of, being able to justify higher prices for stocks because of low interest rates. And there's something not quite right about it from my perspective. So take a look at that video if you're interested. A company with high growth but low return on capital employed, or a company with low growth but high. Yeah, I don't really know how to answer that. I'd need more information. So I got to take a pass on that one. Trevor, thank you for the videos, you bet. Given what Monish just said in his latest video about investing in a business and not combining causes with investments, will this make you rethink looking at investing in greener companies? Or do you think there are good opportunities in the clean energy sector? Yeah, it's a great question, and I was surprised when that question was asked to Pabrai. I don't think I've never heard Pabrai answer that question, what he thinks about impact investing, ESG investing. I was really glad someone asked that. And it makes sense. It makes sense that Pabrai would separate the two. He says you can't optimize for both. You can only optimize for kind of, investing or philanthropy, right? But my thought on that is my circle of competence, because my interest, my passion is in, the sustainability space, decarbonization, moving toward a, fossil-free future, at least reduced fossil fuels, that I can have an edge there because I'm interested in that. There's passion there for me. It's something. It's a future that I want to create and help kind of bring in. So that's kind of my justification for, why it makes sense for me to combine those two. But it also makes sense of why Pabrai would want to keep them separate. So it hasn't changed my approach to it, but it was interesting hearing his take. Again, Frank, what type of holding period are you typically aiming for in your investments, and are you willing to pay up for a long-term compounder? Monish has moved more toward modern Buffett, buying and holding, based on influences from Nick Sleep, Thomas Phelps, right? It's not Michael Phelps, it's Thomas Phelps. Will you do something similar? Yes, I am. I want to do something similar. I think Greenblatt may have said this, but one of the biggest advantages we have as small investors is patience. Okay, there is such a lack of patience in, with most market participants, that if you can be different in that way. Wow. If you can invest differently with the kind of the have a different time horizon is what I'm getting at here. That's a huge edge potentially. And it's definitely an edge that I'm looking to capitalize on. So, am I willing to pay up? That's a harder question. I'm definitely willing to hold for as long as it takes. I don't know yet if I'm willing to pay up. I don't know that I'm going to need to be willing to pay up. Pabrai seems pretty confident that he's going to be able to find some of these. He talks about how his current portfolio is like an aircraft carrier, right? It's this massive thing. And it's going to take him a couple of years to, kind of turn the aircraft carrier away from the buying $1 for 50 cents to getting into these long-term compounders that he can buy, hopefully even at a discount on a kind of present value basis. So, the great thing about being shameless cloners is we get to watch what Pabrai is doing over the next couple of years. Okay, so hopefully, we'll be able to find these great long-term compounders without having to pay up. That's the ideal. But certainly, if you have to pay up a little bit for one of these 100 baggers, right? It's worth it. The issue is we don't know when we get in if something is going to be a great long-term compounder. And the more you pay up for something that might not pan out, the more money you can lose by doing that. So, Eric, can you help me explain aftermarket trading? Yeah, I've been curious about aftermarket trading as well. You see kind of stock prices moving after the market closes and before it opens. Investopedia has a little article on this. Let's see if we can find it. How does aftermarket trading work? So this one, Investopedia. So apparently even retail investors like us, we can buy and sell securities outside of regular trading hours. And I guess there are brokers that allow us to do this. I don't know if we need special permissions for that. But take a look at this article. It gets into kind of which of these brokers allow you to do that, and just goes into this aftermarket, after hours trading, which is kind of interesting. Not hugely relevant for most investors. Is investing always a side hustle if you want to be a long-term compounder? Is it always a side hustle? Pabrai talks about investing, ideally being an activity of leisure. But, it can take a lot of work to get to know a business. And, it's not just getting to know that business, it's getting to know kind of related businesses that feed that business, businesses that are fed by that business. Nothing exists in isolation. So for an individual investor who would like to pursue it as a full-time career, if you don't sell, then how do you earn your bread and butter? Munger would say, you don't get rich selling, right? You get rich waiting. He doesn't say selling. I forget the exact quote. But this game, it's really all about making a great investment up front, buying the right companies, okay? Hitching your wagon to the right horse, and then waiting. The patience is where you make your money. So it's hard to really speak to this. I'm not sure what kind of full-time career you're looking for as an investor, whether that means managing your own fund or working as an analyst or working for some corporation. I'm not sure exactly what you're asking, but you don't need to sell to earn your bread and butter, right? Look at Warren Buffett's net worth. How much of that is based on, what he's sold versus what he's held on to, right? So, that's how I would answer that one. This is a really interesting question. What is the opinion of your wife about investing? In my own experience, it's something the better part is very skeptical about. So my wife, she has no interest in investing, okay? Which is great because, I go in, I do what I do. I do what I feel is best. I don't have to justify anything to her. She kind of gives me free reign with the investing, which is fantastic. I think since I've been growing my YouTube channel, she's, it's making her a little bit more comfortable. Okay, so at least somebody's listening to this guy talk about investing. Maybe he knows a couple things. But yeah, she doesn't participate in it at all. And I don't, she comes from a family of real estate investors, so she doesn't see it as a casino. She definitely knows she doesn't know much about it, but she doesn't care. She doesn't want to know much about it. So that's kind of how we navigate that whole thing. CDSL in India is a depository service provider, a multi-bagger in the making. Thanks for that tip, Nish. Bill, as the buy-sell orders for a stock roll in, is a computer program constantly adjusting the ticker prices? How is this done accurately pre-computers? Who's managing this process? So I don't really know what goes into, the flashing numbers, when you look at your brokerage screen. I don't really understand fully what's behind that or who's managing it. How is it done pre-computers? It seems like it was just a bunch of guys yelling out prices on the trading floor of these exchanges. But it's kind of an interesting question. I've never looked too deeply into it. So, any interest in buying Bank of America? Is it a buy at the current price? So I don't invest in banks. I've never invested in a bank. There's just way too much that I don't understand about how to assess the kind of upside versus downside, assess the risk of these assets that are held by banks. It's far beyond me. So I've stayed away from banks, and I anticipate I will continue to stay away from banks. But I believe Li Lu owns Bank of America, Berkshire. So, if you're running kind of a shameless cloner approach where you don't have the time to do a deep dive on these companies and you set it up intelligently to clone, I think it's probably one, worth looking at. See what other super investors are in it, kind of the likely price that they got in, and go from there. Peace of mind index or stock trading? So I don't know peace of mind. So a lot of people look at index investing as passive. I'm not convinced that it's totally passive. And here's why. There's a lot of different index funds to choose from, right? That's an active choice. You've got to decide how much money you're going to put in each month or how often you're going to put in. You've got to have the conviction to continue plowing that money in when the stock market crashes, right? So, it's not totally passive. I think it's harder than passive gives it credit for. So, and you got to consider if you're investing in an index fund, say an S&P 500 index fund over decades, you're probably going to make 8 to 10% doing that. So I don't get much peace of mind generating 8 to 10% annual returns. It's going to be difficult. It's going to take me longer than I want it to take to achieve kind of my financial freedom goals, right? If I'm just making 8 to 10% investing in the markets. So that doesn't give me peace of mind. If I'm making 15, 20 plus % annual returns, that's going to give me a lot more peace of mind. And then stock trading, if I'm interpreting stock trading correctly, it's kind of the short-term buying and selling, trading based on price movements. And that's not what I do. I think that's a very difficult game to win. So for me, it's really neither of those. It's Value investing. It's, buying something cheaper than I think it's worth that can grow over decades. Okay, these long-term compounders. That's my game. And I think that's going to give me the greatest peace of mind to take that approach. Hopefully that turns out to be a correct assessment. Last one from SC. What are some businesses that are less known that you'd like to own if the price was right, and why? So, there really aren't any of these on my radar, SC. The businesses on my radar right now are, what a lot of these great investors own. They're cloning businesses. So I don't have a great answer to that, but I'm constantly looking for these lesser known businesses that I'm excited about. It could be 100 baggers or potentially even more than that. So anyway, guys, that's all the questions from today. Again, I've been meaning to figure out how to, investing with Tom. He does this fancy thing where, he'll break up the questions into sections on the video, so you can kind of hover over the bottom bar and see, at what timestamp I talk about each one. I don't know how to do that yet, and honestly, I don't have the time to figure it out tonight. So I'm going to post this. Someone was kind enough to kind of create in a comment the timestamps along with the questions that were addressed, kind of a short version of the question. So if you guys are willing to do that, if anyone is willing to do that, to create a comment with the timestamps and the questions, I will pin your comment. I will give you a shout out, and I will be very grateful. And I will even encourage you to connect with me on Twitter, connect with me on LinkedIn, and let's have a little exchange over there, just to show you my gratitude. So if that's of interest, please let me know in the comments. And with that, I will call it quits on this Q&A, guys. I'm loving these weekly Q&As. We're going to have another one at the end of next week. So start thinking about a burning question that you want to lob at me. All right, guys, that's all I got. I will see you all in the next video. Take care.